Welcome back. You're watching Indian Open with us on Bloomberg Quint. Let's do a check of the Asian markets. There has been a mild bit of recovery that we've seen for the Asian market. Shanghai has too, however, trading in the red with cuts of almost 25 points. Nikkei's turned green. That's up almost 30 points right now. And Hang Seng just about trading flattish in today's session. Remember, the handover from the US markets was not so good. And the SGX Nifty this morning is suggesting a gap down opening for our markets. SGX Nifty currently trades around the mark of 10,544. But definitely in the last 8 to 9 trading sessions, we've had a good run up for the Indian market. The base for this market has been moving higher, as we've been suggesting. Good time to get in Agam Vakil to check what sort of cues we are getting then from the futures and options market. Hi Agam, good morning.
Good morning, Navneet. We have seen the Nifty scale another 40 odd points, but we really haven't seen too much change with respect to the open interest in the Nifty futures. And it is the same for the Nifty bank futures as well. Very little change in OI. As one might expect, the VIX fell and it's now well below the mark of 14. And when it comes to the Nifty put call ratio, that is currently standing at around 1.63. Moving in terms of the changes in open interest for options, we're looking at more writing in the 10,500 and the 10,600 puts, unwinding coming along in the 10,500 calls. As far as your stocks are concerned, we're looking at Balrampur Chini entering back into the F&O band, so we're expecting restricted trade there. But we can also look at a lot of longs building up in Nalco. This is on the back of rising aluminum prices, because of which we've seen the stock move up by as much as nearly 9%, and a lot of accumulation in VGuard, an extension of the strength that we've seen recently, another 9% added towards open interest towards longs. On the other hand, the largest Nifty loser in yesterday's day of trade, BPCL, down by as much as 7%, accumulates another 18% towards fresh shorts in open interest. So weakness persists there. So on the whole, we're keeping an eye on some of these counters, but of course also whether or not we do see the Nifty maintain that 10,500 mark going into today's day of trade.
Thanks a lot, Agam, for bringing those F&O cues. Well, clearly, we'll be watching out for the oil marketing companies. And remember, the FIs have been selling in the cash segment for the last 3 to 4 sessions. But on the index futures side, we've seen some heavy build-up towards the long positions. In fact, if you look at the ratio, which towards the start of the series was 18%, now that's moved up to almost 38%. All right, that's about the technical cues. But let's bring in Avinash Gorakshakar, Head of Research at Joinder Capital, who joins us right here in the studio. Hi, Avinash. Good morning. Well, all eyes will be on how TCS opens today. Clearly, it did not disappoint the street. I think on all parameters, the numbers were in line. What was your reading of the numbers?
No, I think clearly numbers were much better than the street expectations. In fact, not only the top line growth, but even the margin guidance of 26 to 28% was quite encouraging. And I think the management commentary on the growth in the digital business was something reassuring. Clearly, the markets would be obviously looking at what kind of traction this piece of the business actually takes off. But my sense is, I think compared to Infosys here, the margin guidance was more or less in line with expectation. And I think obviously digital business is going to be the key driver. I would believe that despite the fact that it trades at a premium to Infosys, I think the market should obviously give it a thumbs up. And if people had actually applied for the buyback, it has actually turned out to be a bounty for shareholders, because after the buyback they have been rewarded with a bonus. So I think that actually displays the kind of shareholder policy of TCS management. So I think to that extent, these numbers actually reassure the kind of premium TCS gets over Infosys.
But given the current valuations, Avinash, if somebody wants to make a fresh investment, which one should they go for among the large caps?
I think my sense is, I think quality will always drive premium valuations, and I think it's always better to look at a TCS if one were to look at the next, say, 18-24 months, because there are going to be challenging headwinds. But as the management pointed out, after a couple of quarters there would be more clarity. Hopefully, if the US market does well, I would believe that client wins and bigger kind of deal wins could definitely come in. So TCS would still stand a better chance compared to Infosys, whereas Infosys is going through its own legacy issues. TCS does not have these kind of problems, and obviously the markets would look at this factor as a key re-rating kind of variable.
Now, so the other point is, Avinash, a retail investor is not really bogged down by choice between TCS and Infosys. He has an option, even if he wants large cap IT, between HCL Tech Mahindra also coming in. Even if we, let's say, leave Wipro out. Amongst these four, is TCS still at the top of the pecking order?
I would believe, I think if it's a portfolio kind of stock, I think a retail investor could possibly safely look at TCS. But as you said, if you look at the risk reward and the valuations, I think I would believe that something like HCL Tech could also figure out, in the pecking order. And I would believe that HCL Tech definitely has not delivered in terms of the stock performance compared to a TCS. So obviously HCL Tech and TCS, probably both these could qualify.
Can I throw in one more question there? What about the mid-cap? Mindtree's numbers were good, signed, or most of the brokerages have maintained their buy rating there, and the mid-caps have actually outperformed the large caps.
Actually, even within the mid-cap category, you're right. I think stocks like Mindtree or Sant, which actually came out with numbers yesterday, I think very strong numbers, actually beating market expectations, and margins were also quite encouraging. So I would believe that Mindtree, which reported numbers a couple of days back, I think there also the numbers have been pretty encouraging. Management commentary has also been very strong. So I would believe that within the mid-cap basket, probably that is also one area where possibly the risk reward could definitely be good. The frontline companies could obviously have a problem with their base effect, but the smaller companies, especially Cient, Mindtree, or even for that reason a Majesco, could possibly be looked upon even at the current odd levels.
Right, clearly all eyes will be on the IT pack. We'll tell you what the brokerages are actually telling about Cient, which did not disappoint the street. But besides that, whole host of stocks which will be in focus on back of its earnings. We also had a couple of bull deals, some results coming in post-market hours. So let's head across to our research team to get more details on that front. Well, good morning to all four of you. Let me start off with the stocks in news. Shraddha, go ahead.
So you have all these dry cell battery makers which will be in focus on the back of CCI penalty. They've actually lowered the penalty on these companies. So CCI has lowered the penalty on Eveready Industries and Indo National Limited, also another listed entity, by 30% and 20% to 172 crores and 42 crores. And Panasonic Energy India, which is again a listed entity, they were spared these from any penalty. So keep an eye out on all these three names. That apart, you have an ET report which says that Schneider and Temasek consortium may announce a deal to buy L&T's electric and automation business by the month end, but that will be at a revised down valuation of anywhere between 13 to 15,000 crores. So watch out for L&T. Yet another ET report which says that Birlas are looking to sell up to 20% stake in Idea Payments Bank to raise about 200 crores. So Idea holds about 51% in the Payments Bank, and Aditya Birla Nuvo, which has been merged into Grasim, now holds 49%. So watch out for Idea and Grasim as well. You have JB Chemicals, which has received an order from the Pollution Control Board to close the formulation facility at Daman. It's an important facility, so watch out for a reaction there. And IMFA, which has received demand notices of about 123 crores in total for alleged excessive mining. So all those are some of the names that we need to watch out for. As also we have India Bulls Housing Finance, which is going to report the numbers today. It's expected to report a net profit growth of 21% at 1,018 crores, and AUM growth likely to continue to come in at 28 to 30%. And these are some of the names.
Well, that's the only big number to be watched out this Friday. But Cient, after Mindtree, no disappointment from the mid-cap IT pack, Agam.
I agree, Navneet, that trend continues for the mid-cap companies coming out with a very strong earnings. So when it comes to Cient, on a sequential basis, we're looking at an 8% rise in revenues, a 34% rise when it comes to profit. And margins, there has been a little bit of disappointment, but this is largely one-off, according to a lot of broking firms. And speaking of them, we have Credit Suisse on Cient. They maintain their outperform, and they have hiked their price target to around 780 in comparison to 750. And they say that the aerospace and defense vertical is very well positioned for FY19. Motilal Oswal also maintains its buy rating on the stock, and it puts a price target of 750 and says that the company is investing for the future, and it sees upward momentum for the company moving in. So positive news coming in, despite the fact that we've seen a little bit of contraction in margins for Cient.
All right, we'll watch out for those numbers as to how the stock opens today, but some other earnings as well, post-market hours and bulk deals.
Yeah, sure. Two numbers that we're tracking, two good set of numbers rather. Reliance Power, that's a steady quarter for the company. Revenue has come down by as much as 2%. That's a muted quarter that we're looking at on year-on-year basis for this company at a number of 2,428 crore. A net profit has gone up by 16%, and the margins have stayed pretty much stable around the 44.5 level. Profits have been higher due to the tax reversal, but then even as the numbers seem to be soft on the face of it, they're pretty much in line with the expectation. Mahindra CIE, strong set of numbers reported by the company. If you look at the top line growth, we're looking at a 32% growth there year-on-year basis. Net profit is shot up by more than 100% to a number of 38.6 crore as compared to nearly 17 odd crore that we've seen in the corresponding quarter. And margins for this company have expanded to 12.2% as compared to 9.5%. What goes behind the making? Operating efficiency, lower finance costs and higher other income goes behind the making of good set of numbers. The other one, in bulk deals, we are tracking Hathway Cables, where Kenneth Andrade, Old Bridge Capital, has bought in 2% stake in the company for a sum of around 65 odd crore. Morgan Stanley, on the other hand, has sold almost 2.2% in this counter. Another counter that we're tracking is Uniply, where the promoter has sold. Promoter Keshav Narayan has sold in 6.1% stake in the company for a sum of around 60 odd crore. On the buying side, you have Malabar India Fund, which has bought in around roughly that same range of stake in the company. Also, we're going to be looking at aluminium stocks because we've seen some correction finally coming in after 4 days of up move that we've seen. It's rebounded from the 7-year high level that we're looking at. So Hindalco, Nalco and Vedanta.
And strong moves were seen for all these counters yesterday. Let's see if there's some profit booking which comes about. But finally, Yatin, have you updated your timeline? There's a new bidder for Fortis?
Yeah, new bidder for Fortis. And once Rakesh Jhunjhunwala told us that if the girl is pretty, the suitors will come. Probably this is one asset, on the hospital side wherein a lot of interest is coming in. This is the fifth, unsolicited, non-binding bid which has come in. This time it's Radiant Life Care. It's a KKR-backed healthcare provider. They are offering a total valuation of nearly 165 rupees per share. This is probably the highest that we have seen so far. And before this, that was the Bunjal and the Burman family, which offered 161 rupees 60 paise for the preferential warrant issue. So far this Radiant bid price or the offer price is close to 165 rupees per share. They say that this might also trigger a 26% open offer. Not only that, they propose to buy a portion of Fortis Healthcare subsidiary SRL, which is basically their diagnostic business. And if you look at the breakup, they say that the hospital business is valued at close to 126 rupees per share, and they value SRL at 39 rupees per share. However, yesterday the board members spoke to Bloomberg Quint, and they said that at this point in time they will only evaluate binding offers, and so far only two people have given binding offers. One is Manipal and the second one is the Hero and Burman family office. So probably the board will set up a committee. Of course, the names are coming in. Standard Chartered is the investment banker, and they will be evaluating each and every bid, which is only binding. So far only two binding offers, three non-binding offers. So let's see how really it shapes up moving forward.
So in all, actually, there are some 5 bids which have come in for Fortis. Thank you so much, all 4 of you. We'll be watching out for all those stocks. Well, I'm going to borrow Yatin's line. Avinash, if the girl is so pretty, would you advise retail investors to hold on to Fortis Healthcare until unless there is some concrete decision made?
Yeah, Navneet, I think clearly looking at the kind of asset value and especially value which could emerge from the SRL diagnostic business, I would believe that the stock could possibly rally on hopefully expectations that there could be a further hostile bid between the 4 to 5 bidders. Typically, a price of around 165 to 175 could be a fair value, and looking at the fact that once this money actually comes in, it could possibly improve the liquidity and the debt position of the company, and I think that could actually give a clear strategic direction to the company going forward. So definitely I think retail investors should hold on. I think you'll probably come to know this on the 26th of April, but overall I think this was on expected lines after the Manipal group actually gave in their initial offer.
Okay, so Avinash, for somebody who is, let's say, holding on to a Fortis stock right now, is that a prudent thing to do, or would you believe a switch is better, say maybe into a Apollo or maybe into the diagnostic companies, Dr. Lal PathLabs or ThyroCare?
No, I think, Neeraj, I think, if you look at the kind of, valuations which Fortis throws, I think probably over the next 2 years, I would believe that Fortis could be a deep value stock, provided the the horizon is slightly longer. This event is definitely going to be a short-term event where you could see a pop-up on the stock price. But going forward, I think FY20 would be a year to watch out. So we are going to see a lot of time before all this restructuring and the new management actually delivering numbers. But somebody who wants to look at Fortis should look at a slightly longer term horizon. Value could definitely be coming in, but over a longer period. So I would believe that Fortis definitely categorizes as a much attractive pick compared to an Apollo or a Thyrocare.
Watch out for those couple of stocks. Uniply is an interesting one, I repeat, only because of the fact that the promoter has had to sell 6% stake in order to accommodate the demand that Malabar India Fund would have had. Typically, Sumit Nagar goes out and buys a larger chunk and not really a small piece within a company. The fact that they've gone out and checked into Uniply at these prices could make it for an interesting one. So, this whole theme of unorganized to organized for the home improvement space and plywood companies right out there might make Uniply an interesting one. The other one though, Avinash, and I don't know if you track this Hathway Den network space, but if you do, then Kenneth Andrade has added to Hathway. The last 6 odd months, I was looking at the Bloomberg chart, a clutch of large bulk deals have happened in this space.
Yeah.
The stocks have been beaten down, decimated, earnings haven't revived. Can we see some revival? Could there be a reason why there are some interesting names checking into these counters?
No, I think this is a very sticky annuity-based business, and I think clearly, what has happened in Hathway or maybe stocks like City Cable, I think we are seeing a lot of action in these companies, Neeraj, for the simple reason that traction is definitely getting in. I think the last mile connection is very important, and these companies are typically well established with their kind of clientele. So I would believe that, although numbers have not got factored in Hathway, maybe over the next, say, 12 to 18 months, hopefully once the debt on the balance sheet comes off, you could see a kind of re-rating on both the operational front, especially once the EBITDA improves. There's a lot of operating leverage expected from this company. So obviously, maybe FY19 second half, you could see numbers actually trickling down, at the net profit level.
Let's wait and watch. And then the other pocket, and at some point of time we'll discuss with Avinash about them as well. The luggage companies, some extremely strong buoyancy that we've seen the last few days. Yesterday, me and Navneet were talking about Safari and VIP and the kind of gains that those stocks have made as well. But it's 8:45, so that time of the show wherein we should get in our technical experts on board and try and dwell a bit on the charts. Raja Venkatraman is Chief Technical Analyst at Chart Advice, joins us on the show, as does Shrikant Chauhan, who is Senior Vice President for Technical Research at Kotak Securities. Gentlemen, both of you, good morning. Many thanks for joining in.
Yeah,
Raja, coming to you first. What are you doing or what are you likely to do on the indices today? For somebody who is in an existing position or wants to start off a new position, would you enter into a trade this morning? The SGX Nifty is indicating a downtick of 0.5%.
Yeah, so I agree with you that the downtick is there very much. And at the open, I would not initiate a trade. But then if you look at this entire week, which has panned out, the week started with the bombing out Syria. And then down the week, we had even the Brent hitting 74. So these were the adverse impacts. But then we had an interesting situation in this week where we had some support from the large caps. And that's what has held the Nifty at the higher levels. So, and also if you look at the option build-up, which began at 10,000 and now it has migrated to 10,500 on the lower side on the puts. So build-up has moved to 10,500 and on the upside it's capped at 10,700. So practically the Nifty could expect to hold on to 10,500 for now. So we would advocate a buy on dips approach because in the region of 10,500 too we see a lot of volumes building up and that could be taken as a cue to go long.
50 points lower would you buy? That's what SGX Nifty is suggesting.
Yes. So our stop loss on the trade would be around 10,450. Until this is broken decisively, one should not be actually taking a pessimistic view on the index.
All right, point taken, Raja, because the momentum so far in the last 2 weeks has been on the upside. Shrikant, let me come to you. Would you use today's morning dip in case if we get, that's what the SGX Nifty is suggesting, to create fresh long positions on Nifty or on Bank Nifty?
Good morning, everybody. Manjit, see, like the way the markets are like doing in this expiry, It opened around 10,100 levels. From there all the way it went to the levels of 10,550, 590, which is retracement and resistance area for the market. But at this level the market is like holding and it is consolidating. The main reason behind it is that VIX is falling and PCR is increasing on a regular basis. So one thing is very clear, that bulls are into comfort zone. Yes, no doubt that whatever the news flow which is there right now for the domestic front is negative, but these news flows are there since last almost 3-4 days, and because of this I am of the view that whenever there is a fall in VIX and rise in PCR, we always try to see buying opportunity at supports or on dips. So that should be the strategy. And today also, after opening 50 points down, I think we should look for adding some long positions with a stop loss at 10,490, or in case if we see the market is opening below that level, then I think 10,450 should be the stop loss. But one thing is very clear, that if we buy on dips, I think that will help to the market. For Bank Nifty, it is better to stay away because it is range bound and chances of hitting 24,900 or 850 are bright. So in case if we see the market, Bank Nifty is falling to those levels, then we can look for adding a Bank Nifty to our trading portfolio. But because of the expiry of Bank Nifty, we are of the view that from today onwards, Bank Nifty should also participate in the current up move.
Okay, let's see. If that happens, both our experts believe that a buy on dip strategy could be worthwhile as well. Now, before we move on to specific stocks, it's 8:50, almost 8:50. So at that time of the show, when we get in our special segment, Bloomberg Edge, wherein Jayesh Khilnani tells us about a pattern that the Bloomberg terminal has thrown up on a stock. Jayesh, what's the stock on the radar today?
Morning, Neeraj. So I'm watching out for Adani Enterprises. That is because the stock has actually taken support near the 200-day moving average. Last few days has been around that level, and as of yesterday's candle pattern, it has formed a bullish engulfing pattern. Let's have a look at what the actual pattern looks like. Well, you have to look at two candles which actually show you the pattern. The first candle, which is the red candle, has to be followed by the green candle. Essentially, that is what we look for. And the body of the green candle, that is more important. It has to be bigger than the red candle that is just preceding the one. Now if you have all of those conditions, you don't have to look any further. Simply it becomes a bullish engulfing and you can go out and buy the stock. Now if you look at the chart of Adani Enterprises, so this consolidation range that I was talking about, this is largely where the 200-day moving average also stands. So, it has taken support over there. And you look at the last two candles over here, there is a red one over here and there is a green one. So now you can see that the green one has completely engulfed the red one that is there, which means that bullish engulfing is in place.
No, just wondering, Navneet, how well has this worked in the past, Jayesh?
Neeraj, works very well. If in the last 1.5 year, if you had bought all the bullish engulfing indications, net profit would be about 45%.
Wow, that's interesting.
The stock was up, Neeraj, yesterday. Just towards the end, there was some recovery seen for Adani Enterprises, actually. Okay, so we'll watch out for that counter, Jayesh. Thanks a lot for bringing in all those details. 3.5% high in yesterday's trade for Adani Enterprises. Let's talk about individual trade ideas for today. Raja, I'm going to come to you. What are your top picks?
Yeah, my top pick is Arvind Mill and JSW Steel.
Okay.
And if you recall, in our previous interactions, we had spoken about the metal pack which was going hot. So this week I did a peer analysis and I found that JSW Steel is outperforming its peers as well as the sector. So, and I find it has got potential to reach towards 350 levels. And after the recent consolidation and breakout, and yesterday it has formed a large body candle also, which indicates that there is strong momentum. And yesterday itself it has moved by around 6%. And there is still fresh news build up plus buying interest which is emerging. There is good potential for JSW Steel to move even 10% from here. So that's why I have recommended it as a buy.
So JSW Steel is the first one. The second one and the rationale
it's the second one. The first one is Arvind Mill.
Arvind Mills. What's the rationale here?
The rationale here is that post a sharp fall since Jan 2000, there was a good consolidation. And now with again some bullish momentum building up in the markets, it has witnessed a good up move and a flag breakout is seen. So, and the flag breakout is a very strong breakout opportunity in technical parlance. And that's why we can see an upward traction of at least 5% on a day to swing basis.
Sure, of course.
Yeah.
But
so that's my first take.
Yeah, that's okay. So Arvind is the first idea. And JSW Steel is the second idea from Raja. Srikanth, what about you? You have an all-buy list as well. Both the stocks are a buy.
Yeah, Neeraj, and today we have some interesting stocks on our radar, and we have recommended to our clients. The first one is to buy Bandhan Bank. The stock has shown some correction in last few days. It opened somewhere close to 450, 455. From there, all the way it went to the levels of 540, 545, and now it is correcting to support areas of 500. So from here, I'm expecting again stock to move and rebound to the levels of 530, 535 because of its overall bullishness. The stop loss is very nearby. With a stop loss at 495, we should look for adding this stock to our portfolio, Bandhan Bank. The other one which we like is Tata Motors, and the reason behind buying is that the stock is in the process of forming double bottom. If you see the overall news flow for the stock, then it is quite positive in terms of domestic news flow, and the way the stock has fallen, I think I'm of the view that based on delivery based volumes and daily volumes, it is going to form double bottom close to 325, 320 levels, and from again here the stock can move to 355, 350. Neeraj, if you see the daily pattern of this, then it has left exhaustion gap close to 355, and it was like the stock was falling from the highest high of 600. So this exhaustion gap is certainly going to fill in the near term, so it's a buy at current level.
Okay, so those are a couple of the picks coming in from both our technical experts. But one pack which was extremely under pressure yesterday was the oil marketing companies. The top three losers, in fact, in Nifty were for the likes of BPCL, HPCL, IOC. Avinash, we did see some fresh short positions being built up by traders. But fundamentally, if somebody has been holding these stocks in their portfolio, what do you think they should do as the oil prices are still trading their 2014 high?
No, I think Navneet, clearly oil marketing companies would remain under pressure because this time, the oil prices largely move in largely because of demand. And I would believe that, looking at the kind of trends which currently portray, I would not be surprised if even we see levels of $75 to $80 a barrel, and that would obviously put pressure on the GRMs. I would believe that this quarter may still be better for OMCs considering some inventory gains, but the coming quarter, that is the first quarter of FY19, could definitely see a lot of margin pressure, and we could see these oil marketing companies coming under severe pressure. Typically we see that once oil prices move up, the dollar strengthens. So their input prices will be going up quite significantly. So it's better to stay put and a little away from these companies, because clearly the upstream players like an ONGC or Reliance possibly could be better beneficiaries and could offer a better risk reward.
What about Avinash? What about the luggage space? We were just talking about it yesterday as well. The kind of gains that Safari, VIP, etc. have shown. VIP management yesterday told us that these are the best economic conditions over the last 30 years that he's seen for his company.
Yeah. No, I think, Neeraj, clearly, the bigger trigger which actually is going to play out, which has partly played out and which would obviously get into FY19 and 20 earnings is the GST trigger, which is going to make a lot of unorganized demand shift to the organized sector demand. And wherever, organized sector players have a stronger brand kind of positioning, something like a Safari or a VIP, I would believe that, there is a huge kind of legroom for these companies to actually, ramp up their top line and margins. So I think both on the top line opportunity as well as on the margin expansion, I think there's a lot of scope to actually rebuild and maybe, consolidate further. So I think Safari, probably a lot of action has already taken place, but VIP could definitely be looked upon if one were to look at the next, say, 18 to 24 months.
The interesting thing that I learned when Sumit Nagar was talking about it, he made this point that luggage is such a bulky thing that in any country across the world, apparently, the top three players occupy 90% of the market. Right. Because if you are a retail space owner, or if you're a distributor or whatever you may be, you wouldn't want to keep luggage which doesn't sell because it's such a bulky thing. Correct. So you would only keep, because it occupies so much space, so you will only keep stuff which has a higher probability of selling, and which is why the nature of the industry is such that top three players will occupy space. Out here, VIP, obviously the market leader, Safari is gaining foothold, and then you have the Samsonites and the American Touristers. So that's essentially the rationale that a lot of investors probably bet on these stocks. I think
in the organized market, VIP is the leader, and then Samsonite and Safari with
I think
only
the last
10%.
Time.
And also, as Avinash was mentioning, this is a sector where the unorganized market is really big.
50%.
It's almost 50%. So imagine the kind of market share shift that can happen post GST. Let's see if that reflects in the numbers or not. Probably the recent insider trading details, if you see, some of the promoter entities of VIP have been buying into the shares, and that sometimes augurs well for the stock price as well. That shows some sort of faith that the promoters also have on the companies. Well, that's about the luggage space. We will definitely be monitoring these stocks in today's session, VIP as well as Safari. But Radico Khaitan, I want to discuss this stock, but I think we'll quickly get the pre-opening rates. I'll just get a technical check going on this. Raja, Radico was up 10% yesterday. Do you see more upside for this one?
Just a moment.
Okay, while Raja just digs out that chart, Shrikant, if you track Radico or some of the other distillery companies, any thoughts here?
Neeraj, certainly this space is on our radar, and the way they have performed, they are very similar to the formations of luggage related companies. Radico also did extremely well yesterday. It was up, but if you see the overall pattern on monthly basis, then the stock has broken its January highest level. So it means that it is relatively outperforming, and it is outperforming to the broader market. It has broken its previous high of 425. Now it is trading at close to 425, 426 levels, and the next level to watch out for is close to 500. So from here also there is a decent upside of 20-25% from 20-25% from current levels. Yes, the strategy should be to buy at current levels, more on dips, because all these stocks are volatile and currently markets are placed at resistance levels. So if we see any dip, you can add more, and that confidence is also there. So along with this, you can even look for adding stocks like UBL as well as McDowell's, United Spirits to our trading portfolio.
Okay, so that's the view coming in on these alcohol stocks. You can look to buy something like United Breweries as well as United Spirits as suggested by Shrikant. But we're just about to get the pre-opening rates. And remember, the SGX Nifty is suggesting a gap down opening of nearly 50 points this morning. The Asian markets have been trading mixed, but some bit of recovery was definitely seen. Just want to highlight, Hang Seng has actually slipped in the last few minutes. Even Shanghai, both these indices have been trading with bit of cuts. SGX Nifty is the one holding above the mark of 10,500. Let's just see what the pre-opening rates are indicating. It's a negative tick to start off with, but remember, these rates will settle down by 9:08. Currently, we're seeing some positive ticks coming back. In fact, Nifty is now above the mark of 10,600. Remember, Raja was highlighting the base is moving higher. We're probably looking at that range of 10,500 to 10,700. And I want to pull up a few stocks. Pull up TCS. Let's see what's that doing in the pre-opening session. Remember, that's a biggie with 4% weightage almost on Nifty, showing an uptick of 3%. Pull up Cyient too. That too came out with its numbers in yesterday, post-market hours yesterday. Cyient is showing an uptick of 1.5%. Brokerages have maintained their bullish stance on this one. Besides that, positive or rather good set of numbers coming in from companies like Mahindra CIE. Very good set of numbers. Even from Bharat Seats, if you could just pull up that counter. Mahindra CIE in the pre-opening session is showing an uptick of nearly between 5 to 10%. Once again, these rates will settle down. Mahindra CIE currently showing an uptick of 20%. Can we also pull up something like from the metals pack, Nalco? Remember, Nalco, Hindalco, Vedanta, all of these stocks were up on back of aluminum prices going up on LME. So it is some bit of profit booking could happen today, and that's what is being indicated in the pre-opening session. Neeraj, right now, Hindalco, Nalco, Vedanta are all showing a downtick, but these are the pre-opening rates. We'll wait for them to settle down by 9:08.
Yeah, but suffice to say, commodities coming off, trader-friendly stocks have gained a bit. We are at the weekend. That this would happen. I just want to mark the rupee and the bond yields. The currency, the NDF market was anyways indicating this 66.03. We are sub 66 on the rupee. This has been fairly sharp, and now the bond yields as well. And let's see if the hawkish MPC minutes lead to the bond yield spiking again. 7.76. This is coming back to the levels from which, after a few measures, we started coming off for the yields. We had nudged about that 7.15 mark 15 days ago when the policy was announced. Post that, there has been a sharp one-way depreciation. As you can see that slide that we're seeing, and this is, of course, what's happened very recently, but if you just look at the 10-year bond yield last 15 days, you will see a remarkable uptick that we've seen in the bond yields after the dip that came in up to about 7.15 odd. There's been a really, really sharp up move. That is the chart of April, and you can just suddenly see the spike up, which essentially is the is the bond yield chart. This wouldn't augur too well for the NBFCs as well. So keep that in mind. There was a bit of a rally that had happened into select NBFCs when the bond yield started cooling off a bit. I think that theory will go out of the window as well. Today may not turn out to be a particularly pleasant day. The macros are not trading all that well. Just a couple of stocks I want to mark whether Hathway Cable is defying the trend today and is moving up. Let's see if that is indeed happening. About 1% higher, not too much. Uniply should be an interesting one too, and let's see if that bulk deal is having the impact on the stock. No, not so much. And Cyient about 3.5% higher, so good going there. What is looking like continuing is Godrej Consumer, though it's all over the place, but likely to start off on a positive note as well. Let's wait and watch if that happens. TCS, of course, remains the center of attention, and at the end of the first 8 minutes, it will be interesting to see if it's added a lot of meat or just a little bit of meat to its stock price. Before we move any further, a quick word from Sumit Sarkari Johnson with the big brokerage calls of the morning. Sumit, good morning.
Good morning, Neeraj. On the big brokerage call for the day, we have today is HSBC on the Indian life insurance sector. Now, according to the brokerage, the insurance market has strong growth potential with industries as the industry is starting to expand. Now, the high growth potential is also on the back of the low penetration rate in the Indian insurance sector. Along with this, the comprehensive roadmap laid by the government and the regulator also provides a good growth prospect for the sector going forward. Now, the brokerage is expecting the protection business to grow margins for the listed life insurance player, and the unit-linked plans to boost the top line of this players. Now, on SBI Life, it has initiated coverage with a buy rating and a target price of 835, and it says that the company benefits from its strong distribution network and cost efficiencies. For HDFC Life, it has initiated a coverage with the hold rating and a target price of 452, and on ICICI Prudential, it has raised the rating to buy from hold and have raised the target price to 450 from 412, as it believes the company's new unit-linked plans offer better profitability for the company.
All right, Swami, thanks a lot for bringing those big brokerage calls of the day. Avinash, before we thank you, any specific fundamental call that you have for our viewers?
My sense is, I think, infra companies like IRB Infra or maybe a Sadbhav Infra could definitely be looked upon, because I think order book wins have started coming in. Hopefully, the traction in the business is getting more steam. And I would believe that Sadbhav Infra has actually got a very large order book. So visibility as well as, the execution has been quite good up till now. So we will probably see a lot of upside, even from the current odd levels. So I think within the EPC infra space, this looks to be a good opportunity.
Actually, just a quick, Navneet, if I can throw in one more question to Avinash. And then, Raja, I'll request you to look up the charts of Mahindra CIE as well. But Avinash, Mahindra CIE, the numbers, what did you make of it? Is it a good enough quarter for you to go out and, make an investment into it? Or are there better plays? Jamna Auto, for example, was at new highs yesterday.
I think Mahindra CIE definitely, could be looked upon from a longer term horizon, considering that, they have a global customer reach. They are not only present in the domestic market, but they have a larger exposure in the European and the US market. So, Neeraj, I think if one were to take a longer term exposure, I would believe that, Jamna Auto is largely dependent on the domestic commercial vehicle players. But Mahindra CIE has a bigger kind of product basket. So, I think longer term, I think we could see a bigger risk reward here. I mean, my sense is Mahindra CIE anywhere below, say, 250, 260 could be a good call to look at.
Okay. Avinash, many thanks for joining us today and giving us that perspective. Really appreciate your time. Raja, you want to take a chart check on Mahindra CIE?
Yeah, Mahindra CIE is basically in a consolidation mode. And over the last 3 years, if you see, after a brief blip since May 2016, the rise since May 2016, the price has just consolidated. And like Avinash rightly mentioned, 250 levels is a strong resistance zone. So unless that area is really taken out, there is no point in actually going forward and investing, because your investment would be idle. Instead, you could actually look for other stocks or other peers like Jamna Auto.
You like Jamna Auto on the chart?
Yeah, Jamna Auto is.
You would initiate a buy on Jamna Auto?
Yeah, at current level and on dips.
At current level and on dips, you will be happy to initiate some buy calls on Jamna Auto. What are the targets that you foresee here? Near term, long term?
See, the dip level would be around 79 and target zones is around 120, 125.
Okay. Fair call.
Well, also watch out for Ever Ready. I think the pre-opening rates are suggesting a downtick of nearly 4 to 5%. And remember, there's some penalty which is being levied by CCI on dry battery makers. So that's the one which is showing a downtick of nearly 4.5% in the opening session. Let's just pull up the OMCs and see where they are settling. It's still not 908, but remember, they were the top losers in yesterday's session. A short build-up was seen. So this morning as well, BPCL is showing a downtick of 1%. HPCL, IOC were the other ones where some bit of weakness was seen. So OMCs continue to trade in the red. Shrikant, if I could come to you, would you take a bet on any of the OMCs on the downside in today's session?
They have shown a lot of weakness on the back of rise in crude prices. And the worst part is that almost all of them have broken their important supports on monthly charts. So one thing is very clear, that they are going to fall further from here. So it is better to take short calls on every rise from here. For example, like HPCL closed around 301, but now HPCL is the part of ONGC. So it is better to stay away from HPCL. HPCL is not going to show you any specific trend. But BPCL and IOC, these are the stocks on which certainly we can take short calls. BPCL has spent a lot of time close to 400 levels. Yesterday it closed around 375. So if there is any minor bounce back up to 385 or 390, there we should look for taking some short call on the stock. For IOC also, we have a similar kind of view. It has also broken its important support 157, but yes, it has support only at 140, 145. So till the stock is not falling to those levels, stay away from the stock, or if there is any bounce back, just create short positions.
Okay. Before we get in our next fundamental guest on board, Rajat, you want to give a call on the OMCs as well? You have a counter view here?
Yeah, amongst the OMCs, I find Hind Petro to be quite weak. And it has actually broken a multi-week support in somewhere in the region of 325. And with the volumes building up and momentum building up, I would definitely recommend one to initiate short at current levels and on rallies, because the signs are definitely weak. And with large body negative candles being displayed, there is definitely a lot of bearish pressure on the OMC stocks. Okay. So HP is my bet for a positional play on the sell side.
Okay, and so whichever analyst you believe in the calls of, you can go ahead and take that position. Let's get a fundamental view before we get you all you need to know out here. Sindhu Samir, go ahead for equity sales at MK Global Financial, joins us on the show. Sindhu, thank you so much for joining in. We'll talk about the market setup in a bit, but since we're on the topic of OMCs, what's your house view? Because different houses have different calls as well of late.
No, well, by and large, the houses are gravitating towards a view that this year will be a relatively volatile, turbulent year for OMCs. Now, if you are here in the equity markets for 1 year, definitely not much is there on the table. But if you can extend the view for 1 or 2 years, these are fantastic plays. These are defense plays in the sense that they're very important for the security of the country. These companies will remain profitable, have to remain profitable, otherwise country's oil security is not guaranteed. So going with a 2-3 year kind of a view, these are great companies to buy. Going with a 1 year kind of a view, yes, there's not much on the table, but then taking again a contra view, when do you buy a stock? When all the bad news is there in the stock rather than when all the good news is there. Okay. So it's all that what investment horizon you have. For peaceful investing, this year will throw up reasonable opportunities in OMC space to go for 1, 2, 3 years. By the way, a fixed deposit, we happily do it for 2 years, 3 years, and never forget to, never really remind ourselves to look at it on a day-to-day basis.
That's a very valid point.
Yeah, I was waiting for Sindhu Samir to bring that in the last conversation as well. He brought in all those Buffettologies as well into play, so we'll hear some more of it during the course of the session. But minutes away from market open, let's tell you all that you need to know to stay ahead in trade today. TCS announces a 1:1 bonus issue along with a steady fourth quarter and a very positive outlook for FY19. The stock likely to start off 2 percentage points higher.
Mid-cap companies Mahindra, CIE and Sign post strong fourth quarter results.
And Fortis Healthcare has decided to form an advisory committee to evaluate binding offers, and Radiant Lifecare puts in a non-binding bid at 165 rupees a share.
Reliance Mutual Fund buys 2% stake in Sundaram Finance Holding at 151.6 rupees per share.
Couple of interesting bulk deals. In Hathway Cable, Old Bridge Capital Management, Kenneth Andrade's firm, buys 2% stake at 39.5 per share. And Morgan Stanley, of course, sells that stake to Old Bridge Capital.
And lastly, Nifty company India Bulls Housing Finance will announce its Q4 results today.
Yeah. And mind you, watch out for Uniply as well. That's the other interesting bulk deal, wherein Malabar Investment Fund has bought about 6% stake from the promoter. The stock, though, starts off likely to start off marginally lower in trade. Just wondering, Sindhu, we'll talk about the broad view, but very close to market open. I believe you stay firmly in the camp that there's no need to put in big money to work right now. Space out your purchases.
Absolutely, absolutely.
But no need to panic.
There's no need to panic. You can stagger your investments. That's the best strategy. In fact, the very concept of SIPs is based on that. But please, for God's sake, don't ignore the markets.
Don't ignore the markets. Ignore TCS?
No, definitely not. Look at TCS. See, first of all, understand, and we have to just that these are very mature companies now. These are companies which are well past those 20%, 30%, then 12%, 18%, and now they are settled between 5 to 12% kind of earnings. So these are those companies which will return you that much. But in case of TCS, of course, the way they are going after digital, it is fairly inspiring. But at the same time, these are companies which will give you very mature kind of returns. One has to be acceptable of those returns and not demand a moon. The size is of a global nature. It's just that we have to be patient with them, that this is the kind of return which will happen. And the kind of disruption happening in this space, artificial intelligence and all those kind of things, these are kind of headwinds which are not going to go away once you wake up one day in the morning, and they will be there. So we have to really take care of all these issues.
All right, just a few seconds for markets to open. So let's get the top trading call. Shrikant, what's your top call looking at the pre-opening rates?
I think it is better to create long positions on Bandhan Bank, which is around 505 levels. Stop loss is very nearby with a stop loss at 495. We should look for creating long positions on Bandhan Bank, and target is close to 530.
Raja, what about you? Your top call? Sorry?
I would go with Arvind.
Arvind
Mills, yeah.
All right, so Havells as well as Bandhan are the top calls from our technical experts, Neeraj.
Okay, sorry, Arvind, right? Arvind. I was wondering, yeah. So Arvind Mills is Raja's top call, and Bandhan Bank is Shrikant Chauhan's top call for the day today. The market's about to kickstart trade. We'll have a start which is, well, marginally in the red, if you will, but essentially a flattish start after days and days of a move, up move, or maybe a day of consolidation on Wednesday. This is not unwelcome. It's okay, par for the course. I believe the mid caps and the small cap indices too would be flattish in trade. Yeah, this is as flat as it can get for the small caps. The mid cap space about 1/3% lower, and the heat map maybe a slightly more sprinkle of red as opposed to the green. Some more red as opposed to the green, and courtesy 2 or 3 pockets. One, the commodity names, by virtue of the fact that commodities have come off overnight, and these guys have had a good rally yesterday, so some bit of profit booking or a pullback coming in. Mind you, NBFCs could be a pocket to watch because bond yields have really spiked up. So that's one pocket, and maybe which is why stocks like Bajaj Finance, which have had a good rally, could also be seeing some bit of a pullback today, but nothing conclusive here. The man of the match has to be TCS, really. As a result of TCS, though, Infosys, HCL Technologies and Wipro too are trading in the green. That's very, very interesting. TCS charted a really different commentary compared to what Infosys gave. So that stock, 2.5% higher, deservedly so. I would presume not really necessarily because of the bonus, but because of the commentary for FY19 is a result of which TCS is doing what it is doing. But quick thoughts on 2 or 3 pockets before I hand it over to Navneet for what's happening across the universe. Stocks which are in news or stocks which did well yesterday, and just taking a check on what is it that they are doing today. So firstly, very strong results from both Mahindra CIE as well as Cyient, and both the stocks start off very positively, 5% higher. It's a strong reaction to good numbers for these two names. Then some interesting bulk deals and some interesting price moves that we've seen. Marquee investors check in. Hathway, Uniply, Sundaram Financial Holdings, but none of the stocks reacting. Let's see stocks which did very well yesterday. What are they doing today? And again, stocks like Jamna Auto, VIP and Chambal Fertilizers. Not so much of a luck for Chambal Fert or VIP, but Jamna Auto continues from where it left off. 94.5 yesterday and about 95.5 in today's session. So good start for this one. Navneet, what are you spotting?
It's a flat opening for the broader markets as well, but let's, Neeraj has already addressed the earnings, Mahindra CIE and signed. I want to also pull up Bharat Seats. Remember, that's also the one which came out with its earnings in yesterday's session. The profits were nearly good performance was seen for this one. Can we pull up Bharat Seats? It's up almost 3.5% in trade. Besides that, ahead of numbers, Indiabulls Housing, remember, will be in focus. The only Nifty company to come out with its earnings. A flat opening coming up there for this one. Also, watch out for Hathway Cables and also Uniply Industries, the counters which we've been talking about on back of some bulk deals. Hathway Cable is seeing an uptick after Kenneth Andrade's fund bought into, and the promoters holding almost 6% stake to another fund. Uniply is having a very, very flat opening. And Neeraj, interestingly, the aluminium makers which were in focus in yesterday's session, from the likes of Nalco, Hindalco, Vedanta, all of them are seeing some bit of profit booking. Remember, the gains that you saw for these counters in yesterday's session were pretty large. Nalco was up nearly 9 to 10% in yesterday's session. Besides that, you've also got something like Bharat Electronics. That's seen a cut of 2% in the morning session. And in terms of sectoral gainers, Nifty IT will remain in focus. And as we speak right now in the opening session, Nifty IT is your top sectoral gainer. And on back of TCS and Science number, you've also got something like Emphasis, which has seen an uptick of nearly 2%. Also, Oberoi Realty is doing pretty well in the opening session. I just want to pull up two more stocks. Radico Khaitan, that was up 10%. That was trading around the life high mark yesterday, up another 4% in today's session. Radico at 437. The other one is Just Dial, that rose nearly 5% in the last 1 hour of trading session yesterday. Just Dial seeing a bit of profit booking in the opening trade at 467.
Yeah, I know, it's interesting. I don't know what some of the other distillery names would be doing, but I was just looking up. I mean, as you mentioned, Radico, the smaller name, Som Distilleries at 270, also trading higher than what it was trading yesterday. I don't know what the Pioneer Distilleries, and one of them, of course, got involved in some issues as well. But look at Pioneer Distilleries, another 7% higher. So the liquor names doing very, very well for themselves. Sidhu, the movement in bond yields and a sharp pullback from where they had corrected to around the RBI policy. What does this, if at all anything, mean for the NBFCs? Because sentimentally the NBFCs had started to gain a bit of a foothold that yields are coming off, maybe borrowing costs, etc., will again go back to normalcy. May not be the case.
Now, just a step back.
Sure.
We can look at NBFCs as pure, simple plays or interest rate proxies. Now, if we go beyond that, then these are companies which are definitely delivering some social value. And from social value, they are generating economic value for their shareholders. So we are in the camp that they are definitely delivering both social and economic value. Of course, there will be headwinds in case of hardening yields, and of course, profitability will be impacted. But the moot point to ask, and the fundamental question is to ask, is that whether it breaks the thesis. That thesis remains intact, that they will deliver sustained long-term values. It will be up and down for a particular set of years. The profitability might be accentuated in one particular year, or maybe downbeat in another year. But the overall thesis that they will deliver value to the shareholders remain intact. There are vast swathes, there are vast sections which the banks are either not catering or are choosing not to cater. These are the companies which are reaching out there and creating value for the shareholders.
Sure.
So, of course, this is not a welcome news for the time being that the interest rates have hardened or the bond yields have gone up. But overall thesis, I think they will cross this hump and deliver value.
Yeah, so nobody's questioning that. The question mark only is whether or not there could be near-term headwinds and thereby price corrections. And hypothetically that you do believe that those price corrections could be bought into, what pockets within the NBFC space? The consumer financing NBFCs, there are these SFBs, stroke, micro lenders, and of course, gold financing companies, etc., etc. What do you look at?
So we look at all of it, but I think consumer finance companies with a massive use of technology, they are creating new frontiers. They are creating new pockets of economically executable places. They will definitely be there in the game. HFCs, which are also quasi NBFCs, also will be there in this space. So these things are there. Of course, if the bond yields climb up from these levels also, there can be a price erosion and price correction. And anyone who is getting into this space should be ideally prepared for that kind of a thing happening. These are not kind of companies which will give you secular pricing power and will not be impacted by all these things. So one has to enter NBFCs very clear that this is what I'm entering into. Once that thing is clear, then of course you will not be negatively surprised when the interest rates are going up or going down. And when they're going down, of course, positively surprised.
Okay, I'm just going to address few stocks before I take the next question with Sindhu. Pull up Ever Ready, that's down almost 10%. We did highlight the stock. Remember, CCI has levied a penalty on dry battery makers. It's down almost 10% on back of that news, but they've also reduced the penalty, I guess, that was levied. But still, there is a pressure, selling pressure, which is coming about for this one. JB Chemicals, that's also down about 4%. The counter has been in focus after it got an order from Pollution Control Board directing closure of company's formulation unit in Daman. On back of that news, JB Chemicals has come in under pressure. And remember, towards the closing yesterday, Neeraj and I were chatting about the companies which have gone to NCLT. So something like Bhushan Steel this morning features among the top losers in the Nifty 500 index. Bhushan Steel, I guess, is down for the third or fourth trading session, almost at the low level of the day. I would call it down 7% in trade. But one space, Sindhu, which has been doing well, the March month numbers of the auto companies were pretty strong. The commercial vehicle space has been growing. How should one play this space according to you? Do you go and buy the automakers directly, or would you have a proxy play in the auto ancillary space?
The answer is that let's not apply a binary. There is no binary operating between the mainline auto companies and auto ancillaries. A smart investor will definitely have his fill of both the mainline auto companies and the auto ancs. There is no need. By and large, the rule of thumb is this, that the ancs in sheer percentage terms might benefit more because they are you can say a proxy play on auto ancillaries or auto mainline companies, but one can choose the leaders among all the spaces in the auto space, primarily mainline auto companies and auto ancillaries. So there is no binary out here.
What about Tata Motors, if you can talk stocks specifically?
I cannot talk stocks, but look at it from the kind of high frequency data which the economy is generating. If last 2 years were for the macro, this year will be for the micro. Micro is increasingly getting better. This quarter will, I hope it confirms it. But from the micro perspective, if data is getting better, there is no harm in going for the leaders in all these spaces which are showing incremental better data.
Okay. Your first 10 minutes of trade done. Just looking at stocks, and TCS is now up 3.5% or 3.25%. So the big boy has gained strength. It's also percolating down to the others. The top 4 Nifty gainers are all IT names: Wipro, HCL Tech, and Tech Mahindra. So Nifty IT must be shooting up in a really good way at the start of the trading day. Infosys too up about 1%. Shrikant Chauhan, just a quick thought here: Nifty IT or any of the 4 or 5 large cap names, is there a trade that somebody can initiate at these levels?
See, for Nifty IT, it is like doing extremely well. It is into a new high in today's date. It opened up with a gap. And if we see the other components, they are also doing well. Like TCS is now already into a new zone and it is doing well. It is going to do well. We are of the view that it is heading for finally 3,500 by the end of this year. Infosys, which is trading around 1130, is heading for 1230, 1240. But one stock which we really like is HCL Technologies, which is currently trading at 1050, 1055. And here we have viewed that the way it has formed formation and it is outperforming to the overall space in last 3 months. Here it is, we have viewed that it is heading for at least 1150, 1170 in next few days of time. Even at this price, it's a strong bid to buy for. And apart from this, if we really have to focus on mid-cap IT, then Mindtree looks really good to buy even at current levels.
8.5% as well. So the result boys are definitely reacting. IT at the center of action today, and which is probably helping hold the index up, because the Nifty Bank, remember, is down about 0.5%. It's just that IT is trying to negate that. If you just look at the contributors list of the Nifty 50, you will see that it's TCS and maybe to an extent Infosys, which are helping hold the index up and contributing to the green on the Nifty. TCS and Infosys at the top draw. In fact, it's all IT, HCL Tech and Tech Mahindra, and IT is helping hold the index higher because banks and Reliance Industries, ITC, the heavyweights are actually down in the session today. Raja, any thoughts? Any stock that pops up on your screen? Maybe a view on JSW Steel, which was a recommendation from you.
Yeah, the metals pack did witness some initial profit booking, but looking at the overall market condition, the metals are definitely driving ahead once again. And based on the stock which I recommended, JSW Steel, again the momentum has started building up, and I see that one should actually look to initiate a long in this trade even at these levels.
Oh, okay. It's lying flat though right now, but could initiate a fresh long at these levels. Midhani continues to rise and shine, up another 5% at 177.5. Lemon Tree Hotels is up about 3.5%, so that's doing okay. And Jamna Auto another 2.5% at 96.5, 97. Sindhu, final question really from my end. I don't know if you guys have coverage on the liquor space or no, but the stocks are really popping up on the screen the last 3 or 4 sessions. Either the large ones, mid-sized ones, is there merit in trying to own them afresh from after the rallies that we've already seen in them?
I mean, look at liquor stocks. They are the original consumption thesis. There is a demographic element to it. There is a consumption element to it. And now there is an input price benefit which is accruing to them. And you are seeing the action of all this on the stock prices. But going forward, it is not a pure FMCG kind of a play. There's so much of regulation around them. So it will not offer you a peaceful sort of a rally or a peaceful kind of a return for next 1 or 2 years. Like NBFCs, they will remain volatile. But in terms, looking at the Indian macro play, in terms of the demographics, in terms of social norms and mores around liquor consumption going to change, these are the stocks one can hold for a long term. By long term, I'm not saying 10 years, 1, 2 or 3 years. 2 years.
You're happy to own them?
I'm happy to own
at the current prices.
At the current prices, what prices mean nothing at the current valuations.
Current valuations, yeah, sure.
Yeah. So they offer a archetypical India story. They offer consumption, and now they are so radiant at the moment because there is an input price benefit which is coming to them. But yes, it's a consumption theme.
Well, amongst the stocks which are trading at new highs, Radico Kazan right up there, 6.5%, 448, certainly shining bright. Sindhu Samir, Raja, Shrikant Chauhan, gentlemen, many thanks for joining in today and giving us your thoughts. Really appreciate your time, gentlemen.
Thank you.
Okay, the market's trading flat. Nifty Bank down 0.5%. IT salvaging the show today. We take a break. On the other side of the break, we take a look at the bond markets, which are viewing the MPC minutes with R. Sivkumar of Axis Mutual Fund. And the race for Fortis far from over as the panel mulls over the offers on its table. We analyze the developments with Mohit Burman of Dabur and Amit Tandon of IIAS.